Did you know that bank specialists can't work outside of the country? So if they go on vacation, they can't work on their files. This is just one of the insights I got from my conversation with Sarah Matheiu. Sarah is a ex-banker. She's been in banking for 8 years before becoming a mortgage broker, and shares some of the things that she's learned in making that transition. For instance, how brokers can earn 200% 2 times or more than a typical bank specialist. How we know that brokers have more lending options, but also Sarah talks about how the file control is really important. And of course, increased flexibility in technology and marketing, and even travel, being able to work remotely and be able to still work your files if you choose to. Not that you have to work when you're on vacation, but if you do want to go somewhere, it's nice that you can do that. Also, at the end of this conversation, Sarah and I talk about the importance of shopping around for brokerage and how it's very difficult to comparison shop because they all do it differently, and transparency is not like in the bank where everything is a standard operating procedure and everybody gets the same. And so bankers come into the broker channel thinking that's what it's like, but it's not. And so at the end, I'm going to do a breakdown of the 4 types of lender compensation that they may pay, they don't pay them all. And then I'm going to give you a resource that you can go check out to actually compare and see if you're getting access to all that types of compensation. Before I jump into this episode, I want to give a shout out to our title sponsor, Finmo. Finmo is a Canadian mortgage application, document collection, submission platform designed specifically for Canadian borrowers. It's very easy to use, and it's got some cool features like Smart Docs. It knows what documents your client needs based on how they fill out the app. It's connected to Lender Spotlight, which has the absolutely best program for searching for rates and guidelines, over 8,000 and always climbing. And also, it's got smart submission nodes. So as you go to hit submit, it's pulling key data to make it easier and faster for your lender. Check them out at lendesk.com/Finmo and check out this conversation with Sarah. Hey, Sarah, welcome to the show.
Hi, how's it going?
I'm fantastic. So I'm excited to chat with you. So if anybody doesn't know who you are, can you give me a little background on who you are and how you got in the mortgage biz?
I've been in the mortgage business now for about 8 years. I was kind of a licensed assistant, moved over to the banking side of the world, like full commission only. And then my career really took off from there, where I went from 0 in sales to 44 million in 1 year. And then my husband wanted to join the industry, so I came back to the broker channel. And we've kind of had a mix from our business growth from there, from marketing to team members coming with us. And yeah, here we are today.
And so you were a bank specialist, as we would call it, and then now you're a mortgage broker, right?
Yeah, exactly. They call it, the bank I was at was a mortgage specialist, but each bank kind of has their own.
They have their own name, but same idea. And so if you're listening, just to give people context. And then, so what I want to ask you some questions about is, since you know quite a few people that worked in banking and have moved over to being a mortgage broker.
Yeah.
What are some of the things that they ask you? What are the questions that come up if I'm a bank person and I'm like, I'm not sure about, this broker space? What kind of stuff would come up that you typically see?
I'd say the number one question is kind of obvious, and it always goes back to pay, how much you can make in the broker channel versus making at the bank. The bank kind of gives you a sense of security because you obviously have this big brand behind you. Some of them do offer a small salary to kind of get you going. The bank I was at was about 6 months, and I can't remember, it was a couple $1,000 a month. But you kind of quickly realize that when you're commission only, a couple $1,000 a month isn't going to cut it, right? So, no. Especially when that stops and now you're led to just be full on commission. So the biggest thing would be the pay difference. So as you know, in the broker channel, we have the ability to make up to, when there's compensation bonuses, up to like 140 basis points, right?
Right.
And whereas at the bank side of things, where I was anyways, you were kind of averaging, I had a book of 44 million. And at the end of the year, I looked at, my spreadsheet, and I was averaging around 55 basis points. So you're already way less than half there, almost 3 times. And then you don't even consider the fact that when you're at the bank, you're an employee. So you're getting taxed like an employee, even though you're commission only. Whereas when you're a broker, you're self-employed. So you have a lot more tax advantages when it comes to compensation. Obviously, that changes interprovincially. But if I looked at my taxes when I was doing 44 million in sales, and then minus 55 basis points, so that's kind of like 22 million in sales, that's for easy math, then I was getting taxed 53% in British Columbia. So now
Right.
you're like at what, 11 million in
Right.
sales by the time you break that down. So making around 100K a year, whereas in the broker channel, that would be 450, 500K. So that's a
It's a
massive
lot.
difference.
Well,
Yeah.
BC stands for bring cash because
Yeah.
it's the tax rate. I'm not surprised that you're taxed at 53%. But yeah, you get into the top tax
53%.
bracket and you
You
don't
do.
have the same tax planning options that you do
No.
when you're self-employed.
You have some, like you still have some write-offs, the ability to do your home office and that kind of stuff, but not as much as the sole proprietor would have, or even more so when you are able to become an incorporated company.
Right. There's more options. Okay, so that'd be the first thing is like the difference in pay. What are the things when you talk to bank specialists who are thinking about getting into the mortgage side? What other areas do they have concerns over?
I would say the majority of them, even, I've only worked at one, but we've had a couple people join us from different institutions at this point, and they all have a similar concern where they are the document control, like the document, what would you call that? Like review.
Yeah.
So their clients give them the documents, they review them much like we do as brokers, and then we submit them out to a lender. Well, they only have one option for their lender, right? We have multiple. So their lender will review it. They've got a team that does it. And sometimes that process could be a little bit broken or slow, or if it's very automated, it's kind of like a tick box and you'll get a pay stub back that could, delay the process by a week sometimes because you're doing all this back and forth for just really silly little things. So a lot of them are curious about what that process looks like coming over to the broker channel.
Right. So, okay. So just so I'm clear, if I was, again, every bank is slightly different, but essentially you're saying that if I'm doing the document review process can be clunky.
Yeah.
Would you say that's correct? Okay. So then, and then how do you explain I know how you're going to explain this, but let's say somebody's a bank specialist listening to this and they're like, so how would you explain the way it works on this side?
I kind of explain it because I obviously felt the same way when I was at the bank, that some deals would go smooth and others would just be like pulling teeth and you were like so frustrated about the process. I kind of explain it that the broker channel, now that you have access to dozens, if not hundreds of lenders, depending on which brokerage you're with, obviously they don't all have the same quality of their process, right? So some of them I won't mention any names, but some of our lenders, as you know, start to become your favorite because they have a killer process. They review all your documents up front, underwrite it, and it comes back to you fully approved and unconditional, right? Whereas others still have a rather clunky process that can impede the quality and the service that you're trying to provide to your client. So I explain that you have an array of options and it's up to you to decide on which connections you're going to make with which lenders, because most likely their process, sometimes pay is obviously better, but you learn as a broker really quickly that process sometimes outweighs that, right?
Yeah, for sure. At the end of if you can't get it done or it's so painful that the extra pay is not worth the
if you're going to lose the client or the client's going to get so frustrated because you're asking for this, asking for that, or sometimes, we've all been there where the deal has been unconditional and all of a sudden they review it again and they're asking for more stuff a couple of days before closing. You quickly learn that you want to use a lender that's solid, right?
Yeah,
so we have options for those and we have other options. So.
Right. And then it's just about communicating it. So even though lending there's policies and it's still a relationship business at the end of the day.
Oh,
I'm sure you've noticed that, right? Like, so how important is it that you have a good relationship with your underwriters?
So important. That can, as you know, can make or break your business. Like when I hear sometimes BDMs or underwriters saying like, "Oh, you're so nice," or brokers are always like yelling at me or whatever. That's the last thing you want in this business is to, pardon my French, but piss off your underwriter, because now all of a sudden your flow, your process is automatically broken, right? Mm-hmm. So no, you definitely want them to be friends, not enemies. That's for sure.
No, that is not the right you don't want an adversarial approach to it.
No.
Okay, so there's the pay difference, there's the document, and basically lender options. What other things do you notice when talking to bank specialists who are looking at the broker side?
Well, for me, I love to travel. So the first time that I joined the bank, I was actually going on a 3-week road trip with my husband, and we were going down to the States to kind of, do the Oregon coast and kind of hit, Utah and a couple of awesome hikes. And all of a sudden my boss was like, "Oh, you can't work in the States. Like, you're not allowed to submit a deal out of Canada, like out of the country." And I was like, "What?" Because I had come from the broker channel, and my boss at the time, she was working in Mexico all the time. So I was like, "What do you mean?" So that's a big one. And, one of the first brokers that approached me is from out of country. And he's, ever since he's joined the broker channel, he hasn't even stepped foot in Canada since he got his license. And he runs his whole business from somewhere else. So that's super important in today's day and age. We work from our laptops. We want to be able to work from anywhere personally. Right. And a lot of people feel that way, especially when it's a vacation and you're not quite ready to shut your computer off. You still need to
even if you're not moving, maybe you're going away for a week or two, but now so what if I'm at the bank, do I have to hand that file off to someone else and lose pay on it, or what typically happens?
I would imagine most lenders have different processes, but where we were, what was recommended was your computer still worked, but you had to work with somebody who was basically going to do the submission of your file in Canada. So they tracked, your VPN status to make sure that the deals and the information, I guess you could say, was in Canada.
Right. So you couldn't access any of that stuff remotely. Yeah. And I've got friends that run their whole. I got one friend who's run a almost $200 million a year business from Barbados for the last 2 years. Yeah. And his clients are in all over Canada, mostly Ontario, but it doesn't make any difference. He's with his family. He gets to enjoy that. So there is definitely upsides to having that flexibility.
Well, when you're self-employed, that's part of the reason you do it is to obviously work-life balance. When you're first starting out, it's a little bit skewed, but you get to a point where you want to enjoy that and you deserve to do those things, right? So we just went to Mexico for 2 months, and I don't think any of my husband, he's a broker, I don't think any of his clients really knew the difference.
They don't care.
Our real partners knew we were there, but it didn't bother him because he was on his computer from regular hours and just from different location, right? So the service didn't change. But so to me, that's important. And I'm noticing to a lot of mortgage specialists that is really important as well, is that ability to move around and have that remote work option.
Right. Okay. So we talked about the pay. We talked about sort of documents and lender options. We talked about travel. What other things do you typically see that someone would have questions about, or if they were, looking at from the other side?
I noticed one of the big questions, as far as the process being different, is that, the word insurable isn't huge in the banking world. They usually have insured and conventional, and it kind of stops there. So it's really coaching them on what an insurable deal is, obviously what it means and what you can do with that. Because obviously there's interest rate advantages to knowing the difference between an insurable rate, especially this year with renewals coming up. Yeah. It could be make or break, right? Compared to what if you're giving quotes. So really educating them on that process. Another big question they have when they come on board is appraisals. That's usually just a button that they click when they're at the institution. So getting them familiar with NAS and having accounts with these systems is important. Trying to think what else.
What about technology options? What new technology options are available to you that you didn't have access to before?
Yeah, that's a good one.
I know. I kind of knew that was going to come up, right?
I forgot about that because I've been working with the broker channel,
and you're very technology forward anyway.
I love technology because it can obviously skyrocket your business and just make life easier. We talked about work-life balance. You can achieve that through technology, right? So obviously when you're at the bank, and I can only speak for one, but you have an older system. You have to think of the chain of command that it's got to go through to see it change, right? So your system, I always call it like prehistoric, like dinosaur age, because it's old and it's clunky and they've probably had it forever with very minimal changes, because you're not, by the time it goes from the top to down, it's just not quick, not a quick process. So that's often a good question that they have when they're coming over. And I'll show them, I use Finmo. So I show them Finmo and they just like can't believe it, right? They're like, This is crazy. This is so simple. It's just night and day difference. And they can obviously appreciate that, right?
Right. Yeah. So there's more technology options available. And because these companies, it's very competitive. So they have to make, in my opinion, they do get some great stuff. I mean, and Finmo is a fantastic tool.
Yeah.
And then the other thing would be marketing options. So that, from my understanding, when you're working as a part of a branch and if you're a technical employee, you do have more limitations on your marketing options, correct? You have to be a bit more. Tell me.
Yeah, like when I first started, I would say that I felt comfortable having a big brand behind me that people recognize more so than being a mortgage broker and you're kind of trying to create your own brand. But as my business evolved and I got busier, you turn into your own brand, right? People don't really care about that big.
They're coming to you because they trust you and they like you and it's not the brand. Yeah.
Yeah. So like one big thing, obviously I'll talk as something as simple as an email. And you've seen this too, is the importance of having your own email. So when you leave the banking world, you're leaving behind all your contacts and your email, which is essentially like the biggest part of your business, right? So having your own brand, like let's just say sarahmatheiu.ca, and being able to bring that with me wherever I want is so important. And then obviously, establishing yourself as your own brand is so important because now you can move around, you can leave the bank. And like you said, people just want to work with you. So the ability to have your own website and to have your CRM, like we weren't allowed a CRM system at the bank, because that information was the bank's, right? So having a CRM is huge. I have one of our bankers on our team. We're going to have a CRM. He's so excited because he's never had one and he's been, in the mortgage industry for years. So yeah, there's just so many opportunities on that front, what you can do as far as social media, anything really.
Yeah, that's true. And then so tell me a little bit about, because you are built a very strong business using social media as a sort of the backbone of that. Talk to me about that. What have you noticed about it?
I noticed that when I was at the bank that they had a lot of, I'll call them assets, social media squares that were available to like kind of click and pay or click and schedule. And then when I came back over to the broker channel, there was really nothing like that, but there was obviously a need for it because people either lack the technical skills to create it themselves in Canva or the creativity or whatever it may be, the time. The time is a big one, right? So for us, I started creating these templates and the templates just evolved into squares, into reels, into stories, into scripts, like what to say, on your social media if you're going to do a video. Because that was a big one that either newbies or even these bankers were like, I don't really know what to say,
Right.
So yeah, we've just kind of evolved our business to suit whatever the broker really needs. And our bankers really love that because they've never had that flexibility to grab something, create it, and put it into Canva, change all the colors, slap their logo on it, and it's something they can be proud of because it's them, right? So,
right, yeah. And you do, at the end of the day, you are branding yourself as the people will follow you as an individual. 100%. So you have if people, I know this, but you have a service that you also provide for brokers, is for people that are in the mortgage space. So tell me about that. What is this service?
As for the templates?
Yeah, templates and social media stuff. So
we offer like from anything from templates to like website templates, newsletter templates, you name it. And then obviously social media squares, which would be based out of Canva. You've got like the different sizes, so you could put it in different parts of your social media. But we also have like a managed service where you can hire one of our social media managers to like take over your account, use your branding, your fonts, your photos, your logos, that kind of stuff. And we try to be as compliant as possible because we're familiar, as being a broker myself, like what we need to do. As example, in Ontario, how strict FISRA is.
Oh yeah, so they're very much, they want to, you can't just,
can't just do anything. Yeah.
You can't just do anything.
Yeah, so we do that. Like I said, we offer the scripts, and now we're moving into more of a CRM kind of multi-tool platform too. So essentially, if our brokers, as the brokers that we have in our marketing company, need something, we're trying to find a fit for their business to help them grow.
I'm wired the same way. It's like find a pain point, solve it, and then hey, maybe someone else will find this solution useful.
Exactly. And like asking people for feedback, what they need and what they need to grow is huge, right? Because for a long time, we weren't doing scripts, but I mean, that's the way social media is going. People are doing more and more videos. So we're offering that as a service now for sure.
Right. Yes. Right. You give scripts for people. That's right. I've seen those. That's clever. Yeah. And I think like I've been trying to use social media more, and it's still something I feel like I'm very clunky at, but
I think it's going well. I've noticed an improvement just in the last few months with your.
I have people helping me with it, but it's like, give me another 3 or 4 months, and hopefully we've got somebody that's going to be taking over, like at least making sure that it's done consistently. And for me, it's
that's the hard part, and that's why I think these templates help. A lot of the feedback we get is
because then you can do something consistently. Because if you don't do it consistently, it's sort of it doesn't work as well. So I feel like that part has been really helpful. Okay, so we'll go back to any last sort of, if somebody is in the banking world and they're like, hey, I'd like to find out more about being a broker, what will be any last piece of advice you have for them?
I always kind of tell them to do their shopping around, to obviously look into brokerages, and transparency is huge, as you agree with and know, because I've kind of been part of a couple different brokerages, and I always explain it's kind of like a McDonald's, but each franchise is different, but imagine each McDonald's being able to give a different price for their burgers and stuff. Like, I was like, they're not as transparent as what you would think.
Oh, that's actually, I never thought of it that way. You're totally right. It's like you're a franchise, but they don't, it's like, oh, but we do it. We don't make burgers that way. We do them this way. And this is what you pay. And like, yes.
So I really encourage them to do their homework, because you got to think the average broker, you may know this more than I do, but last time I read a stat on this a couple of years ago, maybe did, under 15 million would be like a good, and then, I mean, lots of them fail in their first few years as well. But you have to think mortgage specialist, they get to this, like when I joined the institution, like their goal was like 15 million each person. By the time I left, it was 25 million per person. They've got some really strict targets. And last time I spoke, one person who's looking to transition over, like she did 38 million one year, and she wasn't even near the top of her list. So these people are coming into the mortgage industry trained, looking for brokerages, but they don't know the language involved to find the right fit. So they get attracted right away by the highest commission percentage, right? But they don't understand the breakdown on, is there a royalty? What does that include for my split? Is it forever? What kind of training do you provide? Anything.
Are you getting compensation on all? There's many different ways. There's at least 4 types of compensation. So are you getting all of them? Or are you getting some of them? And which one?
And that's what they don't know. They come from the bank where there is that transparency, because it's written in an SOP.
And everybody gets the same.
Everyone
basically,
gets the same. Yeah, it's an institution. So I always pressure them to, like, even if they connect well with me at the beginning, it's like, no, do your homework and see what there's the right fit. Some people want to be in an office, others don't. Some people are okay taking a lower split for more training. Some people want the highest split possible. So I just really say, do your homework and find what's best for you. Like I know we weren't in Quebec at this point, right? And I spoke to one banker who was moving over, and he did something like 72 million a year. And he got all these crazy offers from brokerages, because obviously that's a big difference in their book of business. Yeah. But they were offering him like some of them, oh, well, you're still new to the broker channel. We'll do a 70-30. And I was like, no.
There's no way.
Yeah. And then like I asked him about the bonuses, like, are you going to get access to all the bonuses? What lenders are you going to get? And he didn't know because he didn't have those questions to ask, right?
No. Yeah,
so I kind of coached him on that, on what to say.
Yeah, that's really good. So if somebody is in the bank world and they're interested in this, how can they reach out to you? I'm sure that you'd be happy to like have a discussion with them and answer their questions. You're an open book. So where would they find you?
I would say to reach out to us on our website. Somebody recently just messaged us through like our info at mortgagetech.ca is our mortgage business. But some people reach out to me on social media. Mortgage specialists are really big on LinkedIn. So I've heard from lots of people in that space too. So just honestly, anywhere you can get a hold of me and I'll give them my cell number. And we usually just chat over the phone is the best way.
Right. That's the easiest thing to do. Okay.
Yeah.
Well, thank you, Sarah, for coming to chat with me. I really appreciate it. And anybody, if you're listening to this and you're in the bank side, like, hey, it's not as scary as you think. And it's it's a fantastic opportunity, but you do your homework and understand that there are some differences, but there's very few people. Most people are pretty thrilled when they make the move. You know, it's not fit for everybody. Like, I'm not going to pretend it's 100%, but it is a high percentage of people who are like, I should have done this sooner.
Yeah, I think a lot of them realize too, like a lot of them are worried. Sorry, I know we were trailing off there, but they're worried about the compensation obviously being higher, but what percentage of their book of business they may lose due to not a lot of leads coming from the institution itself, but maybe some referral partner programs or whatever that may be, people who are, diehard bank clients, that kind of stuff. So to give people an open, book about what happened to me, I was doing 44 million. We dropped down to 32 million in our first year. We're obviously creeping back up to where we were before. That said, you have to think of the compensation difference. And then we also learned too, when I was doing 44 million, I was working an insane amount of hours. Like I'd wake up at 5 a.m., go to my computer, go down for lunch, come back upstairs, back down for dinner, and back into my office till 9 p.m. Like I was working crazy hours. And it was awesome. Compensation was great. It would have been better in the broker channel. But what we learned quickly, especially as a young family, was who cares if I don't reach 44 million? If I do 32, I'm making more money and I'm working less hours. So you get that freedom back too. So it's not being worried about like, oh, I might not reach my targets that I did in the banking side. Think about my husband's home at 3:30 in the afternoon. Computer shut off. Like there's something to be said about that as well than just strictly commission, right?
Yeah, 100%. It's a totally different dynamic. Okay, well, thank you, Sarah. Good chatting with you.
No problem.
Thanks again for listening to that conversation with Sarah. And so I thought I'd break down for you the 4 types of compensation that lenders may pay. They don't always pay all types. And that way you can know what questions to ask. And then I'll give you a resource you can go to check out to basically do some digging on what they pay. So the first thing that lenders pay is finder's fee. And so finder's fee is compensations based on basis points. And for instance, and for simplicity, if you use a 5-year term, and of course the term length will change the compensation amount, the finder's fee. So typically like 75, 80 basis points is what they'll pay for a finder's fee. Then there's something called volume bonus. So that's compensation paid if your brokerage or your company does over a certain volume. And if you're at any size at all, that should be pretty standard. Most places you should have that again, but I guess I shouldn't assume, but you need to have a certain scale in order to get volume bonus with all lenders. And so if you're not, $1 billion, it's really difficult to hit top tier with everybody, billion plus. And so volume bonus, and that can vary again, depending on the lender. And it can be like 25, 35, 20 to 35 basis points kind of thing. Sometimes it's more. These numbers are it varies from lender to lender, as well as sometimes they have specials and stuff that happen. There's also something called efficiency bonus. So this is compensation that's paid and it's earned based on your funding, using your funding ratio, or you use specific products that the lender wants you to use. So maybe they want a certain number of insured products or conventional products. And so they'll tie in something called an efficiency bonus, which is essentially, it will make sure that if you're sending in lots of files and they're not funding, it's a waste of their time. So typically it starts at like 70% and sometimes it's 80%, and then you can get more comp. And some of them will be like, hey, if you're at this number, you'll get this comp, but if you're at another number, you'll get a different comp, you get a bigger comp. And then the last type of compensation is points or perks. So some lenders will pay they have a points program. So every 5-year mortgage, for instance, with MCAP, you'll get points. They call them M points, but they can be converted into cash to buy stuff for your business or for investing in things or rate buy downs. So M points are an example of points that you can get. And not all lenders have all 4. And so if you want to go find in this episode, I'm going to put 2 links for 2 blog posts I did where I broke down the different lenders and how their compensation works. I did TD, MCAP, First Nat, Scotia, and a couple others. And you can go check those out, and then you can see exactly how they all work and see how what types of compensation they have. So there is more than just finder's fee. So often we think about finder's fee. Volume bonus is something that you've heard of. Nobody even told me about that when I first started. And then, of course, there's efficiency bonus and there's also perks and points. And some of those efficiency bonuses are paid directly to the brokerage based on the volume the brokerage did and their efficiency over the last month. And some of them are paid. So this is why you need to ask the question. If there's not one size fits all here, but it's, what they say, caveat emptor, which is basically buyer beware. You need to do your own homework on this so that you can ask the right questions. Go check that out at this links that I'll provide. And hey, thanks again for listening to this episode. So go check out those blog posts that I wrote specifically on how compensation works if you're interested to find out if you're getting paid access to all the options that are available to you. And I will see you on the next show. I Love Mortgage Brokering is the podcast where brokers collaborate and everybody gets better.